Hello everyone, it's Khalid. This is the Daily Pitch International Breaking News section, and today we will be discussing the FOMC meeting minutes. If you haven't liked and subscribed to our channel, let's do so and move directly to the economic calendar and see what do we have. Looking at our economic calendar, Wednesday, April 8th, we have the FOMC meeting minutes. The FOMC meeting minutes is not an actual meeting, it's a summary of the last meeting that took place. We usually look at the meeting minutes in order to see if there are any comments that are either hawkish or dovish that was not mentioned previously, and this could hold some market weight. Looking at the previous state meeting, it was 18 of March. Looking at the previous statement, couple of important things that took place. One of the most important sentences is this: the implications of development in the Middle East for the US economy is uncertain. Of course, as we know that due to the geopolitical tensions that took place, oil prices are increasing and the market expectations for rate cut changed. We will see this later. As for the voting, all members voted for the interest rates with no change except Stephen Miran, who preferred to lower the interest rates by 25 basis points. Moving to the summary of economic projection. Looking at the summary of economic projection, here it is a comparison, March 18 versus the December projection. We can see that in general, the GDP numbers are expected to be higher. In December projection, we were at 2.3, then to 2.4, and for 2027, at 2%, now at 2.3%. The unemployment rate expectations to stay stable at 4.4% for 2026. 2027, slight increase, 2028, no change. And what's more important, the PCE, or the Fed's favorite inflation measure, we are expecting to see a higher inflation, for example, for the PCE from 2.4 to 2.7, the core PCE from 2.5 to 2.7. For the regarding the dot plot or the voting, scrolling down, it shows here that for 2026, 7 members voted for no change, 7 members voted for 1 rate cut. And as for the market expectations before the geopolitical tensions, we were expecting between 2 to 3 rate cuts during this year. As for now, looking at the probabilities, we can see that the markets are not expecting any rate cut for 2026. And not only that, we started to see some percentage that we will see a rate hike as well. All of this is reflected positively on the dollar index. Looking at the dollar index, specifically after all the tension started, we can see that it's moving higher, mainly for 2 reasons. Number one, investors are moving into cash due to the uncertainty, dollar index being treated as a safe haven, and in addition to that, due to the increase in oil prices, reach around the 120, this is expected to show some volatility, some increase in inflation, and the Feds keep interest rates higher for longer. All of these are having a positive impact on the US dollar. As for the FOMC meeting minutes, in case we have 3 scenarios actually. Scenario number 1, if we see that the tone was more hawkish, some members were not only expecting to see rates no change, but wants to see a rate hike in the future, this could have a positive impact on the dollar index. And in this case, we could be breaking this high that has been respected several times, the 100.3, and with the bullish momentum, we could be visiting our next area of interest to the 101.5 to the 101.7. This is scenario number 1 for the dollar index. Scenario number 2, in case the members showed more dovish tone, several members want to keep interest rates stable, or they are saying that the effect of the war and higher prices of oil will not be long term. This could give some relief to the market, and in this case, the dollar index could be area number 1 visiting the 99. And in case it broke lower, my next target will be these candle lows at the 98.5. This is the second scenario I will be looking for in case the tone was dovish. And finally, and the least favorable scenario for us in all economic reports, is the neutral tone or nothing new to be mentioned. In this case, we will see the dollar index, I believe, just fluctuating like this with no clear direction, waiting for the next fundamental catalyst to move the markets. And the final note, speaking about the fundamental catalyst, Currently, what's more important than the economic data is the headlines we are hearing related to the geopolitical tensions. That's why sometimes we have economic data not making any market movement, but one headline related to the war taking place in the Middle East making huge volume and volatility. So guys, that's it for our episode. Hopefully you enjoyed it, and see you soon. Thank you so much for joining.